Good morning, everyone, and welcome to the European crossover webinar. And to paraphrase what Stelio said in the chat room, it's a rather quiet session, to say the least. The euro's moved up a little bit higher, but then it hasn't moved up a whole lot at the same time. So let's move into this. We just haven't moved up a whole heck of a lot. We stayed rather quiet. Same thing here with the cable. The one market that's been a little bit of a surprise here is how well the CAD's held up. I mean, we're now the crude's starting to slip a little bit, so now that's opened the door. But we still, continue to bump up higher even when the dollar was under pressure. So we're pushing back up to that one key area, at least on daily, which is at 33.54. So we're back trying to push back up in here. Dollar yen, we did see that push further lower yesterday, and then come back in. I thought that was the one currency we talked about a couple of days ago. I thought that on Henley rallies back, and it was a little bit frustrating for me because I was working an offer at 11.35, and we just came up a little bit short, and then we slid back rather quickly. But relatively quiet session. You can see the cash dollar index here. The one interesting market has been here with the peso. That came into some good areas. At the beginning of the week when we did our Asian analysis, looking out for the week, we were looking for the market to come under pressure or start the week under pressure, and it did just that. And then we continued to push a little bit lower. And I was thinking that we can make it here to this eventually in time, make it to the 78%. One of the things we talked about was the extremes of the way this market had traded, and that was kind of playing into it. But then we came off that 1890. We tried to bounce a little bit, and then one of the things is I've been fortunate here is that I have not tried to catch any falling knives here in the peso. I've liked the levels and actually made a little bit on the way down, and only a little bit, when I just actually came in rather late, and still did go with the trend, so to speak. But I thought these were good levels, but I didn't step in until I was going to see some actual momentum. That's actually helped me quite a bit here, and I'm surprised that we've come down this low. To me, I had mentioned this was like the Alamo stand here for the peso. I think that was our bias chart support from yesterday here at this 1885. It pushed there, and I thought, okay, we'll dip there. We might even get a little bit of a hair below it, and then we'll really start to work higher. Well, the dollar was still under pressure, but and then equities continue to move a little bit higher. They've worked a little bit lower, but it's still relatively quiet trading even there. But we have continued to stay weak here in the peso. The Aussie dollar has, though, retained most of its bid here. And that's a bit of a surprise. We've continued to push higher, but I like that Blake had posted a chart from Bloomberg with the CRB index. And it was actually the CRB index was actually breaking a trend line. And I guess that's kind of on a, if you look at it way back in the day, way back in the day, you would look at the dollar and the CRB index. So if the CRB index started to break higher, pretty good indication the dollar would move lower. Obviously, also maybe a kind of a take on commodity currencies, but we'll see what happens here. But yeah, it was a break. I thought there was an interesting chart that he had posted into the room. With that, we'll go and move into the news. As I said, it's very, very quiet overall. Very quiet. We are seeing the peso slide a little bit, which has opened the door for the CAD to move a little bit higher here. A new level of Brexit uncertainty beckons. Brexit uncertainty will be elevated to the whole new plane after last night's decision to grant the UK an Article 50 extension to October 31st. Well, this is a Halloween surprise. While that is not as long as many in the European Union had sought, it's plenty enough time to disturb the domestic politics of Brexit even further. The only thing we can now know is that Britain will not leave the EU to tomorrow. The rest is up in the air. The first question is whether the longer extension now removes leverage on Jeremy Corbyn's Labour to agree to a cross-party deal. If it does, as many now assume is the case, it will be a torrid summer. Pro-Leave and pro-Remain groups will use May 23rd European Parliament elections as a proxy war over Brexit. If the ruling Conservative Party is routed for failing to lead the UK out of the EU, May will face huge party pressure to quit. Note she has already suggested she would not be the PM if Britain had not left the EU by June 30th. Hard Brexiters will try to take control of the Conservative Party and ready to commit a no-deal Brexit if necessary. If, on the other hand, a large pro-EU campaign networks that have emerged since the June 2016 Brexit can secure a clear victory in the European Parliament elections, that could also have a game-changing clout. The 6-month reprieve may not be enough by itself to hold a snap general election for a second referendum, but if it were on the cards, the EU could possibly grant a further extension. Could be argued that the chances of the two extreme Brexit outcomes, a no deal and no Brexit at all, no deal exit and no Brexit at all, are all now up on the up. Meanwhile, for business, investors, and anyone else waiting for the take to decisions between a horizon of a few weeks and the uncertainty deepens. An extension of the Brexit deadline to Halloween has done little to disturb the sterling from its recent slumber. With the pound shrugging off the widely expected agreement of Wednesday night, European Union summit, where the UK has given until October 31st to back an exit deal and could leave sooner if it could find some parliamentary compromise. While the positives for sterling as well as the UK and European equities include the removal of a near-term cliff edge, this offset by a number of other risks include UK PM May's possible replacement or general election and by the threat the UK economy of a prolonged period in limbo. As a result, there have been no conviction bets emerging from the pound. As it remains stuck below 131, it's been largely hemmed in between the 130 and 133 for almost 2 months. And with Brexit now potentially kicked out to October, 3-month implied volatility for sterling in the option markets has fallen to close to 8%, its lowest since last August. Elsewhere in world markets, the recent ebullience in equities and risk assets has also fizzled. Worries about a global downturn, uncertainty, and persistent tariff threats from Washington. Wall Street eked out another gain overnight. But Asian markets were mostly in the red. Shanghai and Hong Kong lost about 1%, and Tokyo and Seoul were flat. The all-country index ticked lower, and its emerging market component broke a 10-day winning streak, its longest run of gains in more than a year. Minutes for the Federal Reserve's latest policy did not enliven the U.S. rates debate, and the combination of economic anxiety from Washington and from European Central Bank yesterday did little to encourage investors. ECB Chief Draghi's message was basically the central bank was prepared to use all available tools to ensure inflation gets back on target, although he gave little detail on how might that affect the longer period of negative interest rates on Eurozone banks. 10-year bond yields back below zero, and money markets moved to price a 20% chance of another cut in policy rates this year. Well, there's not a whole lot here. We've got German and inflation, March inflation numbers. We do have PPI and jobless claims, and that's about it here. Just a quick look here on the Australian dollar since it was holding up. Does have been disappointed on Wednesday from the RBA's Deputy Governor Guy Debelle. Stopped well short of expressing any easing bias. Instead, saying it would take time to see how the economy evolved. These comments kept us leaving thinking the RBA is open to cutting the cash rate, but it's not in no rush and is willing to sit back, perhaps for several months, to see how the global developments unload and how the tensions in the local signals are resolved. Over the New Zealand markets can't continue to price in a significant chance of a rate cut given the central bank shift to a clear easing bias last month. And the only reason I include that because Aussie was moving in, it was a very short story. And then this one is very small too. The euro flat on ECB patience, pound unimpressed by Brexit. Dollar and euro were a little changed on Thursday after the Federal Reserve and European central banks hinted they're willing to leave interest rates alone and trade tensions and signs of flagging growth. Sterling traded flat after the European Union leaders extended decline for Britain to leave the EU. The Fed on Wednesday released some minutes in which policymakers signaled they would not raise rates in 2019. Draghi underscored the risk of facing the Eurozone economy, reinforcing bets on further stimulus to prevent the region from slipping into recession. Advantages for sterling as well as UK and European equities include the removal of near-term no-deal Brexit. Extension is unlikely to improve business confidence, much thus limiting the upside to the sterling. The rising possibility of a change in Conservative Party leaderships ahead of the new October deadline suggests a difficulty for Euro-pound to move below the 85 pence level. And the dollar index last stood at 96.93, flat on the day after slipping to a two-week low of 96.82. You know, that's that's that big daily support. Remember, that's 96.81. So we'll move into the analysis now. Let's just take a quick look here at the dollar index. There's that big support here, 96.81. Now we did have our bias chart lower in case, with the ECB, what if we stretch things? But you can see here, it didn't even come to the 96.81. So, I don't know what's going to break us out of this impasse here with FX. Let's move into the euro. I talked about this yesterday after the session. You see the close that we had here. A couple of things are significant, and I'm surprised we're not higher, to be quite honest with you. But look at this close here. Not only was it positive, it also came on a day when the ECB was, dovish, not super dovish, but probably a lot of it may have already been priced in. But it opened the door for us to move higher, to challenge higher. Well, we haven't even moved it that much higher to start with. Okay, so I had a short I'd come in that I just got stopped out at 1278 and a half, and I actually had added on right before the minutes, so I was able to scalp out a little bit to the good on that. And then I tried to give it a chance to work, thinking, okay, maybe we'll dip into like the 40s. But we kind of bumped up a little bit higher, then we dipped a little bit lower, and we're just kind of holding here, not moving anywhere here. So let's go in and see where we stand here with the euro. Let's take a look at the 2 hour. Well, 1291 is that resistance. We talked about if we were to stretch up to 1329. This is amazing. Absolutely amazing. Look at this, folks. That is so dead. We did take this high out. Well, no, we haven't even taken out that high. Just touched it. The people that try it on the short side are frustrated, and the ones that are long can't figure out why the heck this thing hasn't moved higher. And equities started to dip a little bit, but they have not followed through. I mean, at the beginning of the week, we're looking for a slide. We did get a slide, but there was no follow through on that little slide. There was a slide like about 20 handles, or maybe a little bit more than 20 handles. We know where it can push to. So we're going to have to stay with this 1329. We do have 1291 initially here, but this is where the rubber meets the road here. So it'll be 1329. We need to keep that. We're a long ways off right now. Here's that key 1291 on the daily chart. Support for right now is 12. We're going to stay right here at this 12. Call it the 1243 that we had on that bar. We're hemmed in pretty good. You know, on an overall, when you look at the daily here, that 1149 would still be in play because we need, you know, we got above the 1260, but it's 1291 to quell some of this downside momentum. That's what it takes. This just kind of gives us a bit of a reprieve, a pause, and we did get this close. So this was, to me, and I'm surprised we didn't get any follow through. Real follow through is this daily is key in the sense that the way it closes. I mean, it takes out the prior here, and then you come back, and we almost had almost look like a little hammer. But the key thing is that closing above here, open the door for us to push higher, but there's no follow through. But in order for us to actually quell some of this and open the door for a test, we need to close above that 1291. Hence that 1291. But we're so close anyway. That's why I decided to go. I mean, I think it's important to know where we're at, and that resistance would be 1329. But 1291 is key for now. Just no follow through here. With that, let's go and move into the cable. Well, we haven't been able to take out that 3095 with any real significance. We got above it, and here it is at 3095. Looked like there might be some stops hit. We didn't hit the stops. And we didn't. I didn't think we'd hit the stops anyway ahead of the FOMC. It didn't make sense because you don't know what the FOMC is going to be. So I didn't see why they would be hitting the stops before the FOMC. And they didn't. They just kind of got up there, got above it, and then they started rolling down. It's the same reason that I added on to the Euro short. I was really upset with myself because I told myself, I was even saying, I think I even mentioned in the room, is that, okay, once we get past the FOMC minutes, then we can feel good. Other than the initial shorts we took, and I had taken some, and some of us made a few nickels, on the ECB. I thought once we get past the FOMC, we can put on those shorts to hold, for a longer time. Well, if I'd done that, not that it was that big of a move, but instead of me initially put it on the first short, it was at almost like 1259 to 1258 and a half or something like that. I would have come in the 1270s. Doesn't sound like much, but since I scalped quite a bit, it would have made a difference and kind of ticked me off. I was able to add, and I thought we'd come in a little bit. We did, but not even that much. So, but I did end up getting stopped out on the initial at 1278 and a half. And but there's no follow through. I thought when I would have come in this morning, we would have been at 1313 or something like that. So it's going to be 1244, 1329. Speaking of the cable, 3095 is just going to stay in place. There's no need to change it. 3095 is 3095, and until we change it, and that 3095, we've had that in place for a little while. You see, it keeps bumping up over it, but it has not been able to take it out. I don't see any reason to change it. Support now, we had the 2980. Are we going to move all the way down? That's a little bit of a good little dip, so we're going to put the support, move the support just a little bit. I think we're just kind of stuck in this little range, so it's going to be 3008 for right now. We'll move that up. It's been 2980 all week long. Just move it up just a little bit higher. That's we're in a tighter range. We'll move into the Aussie. Boy, these markets are dead. Holy smokes. I just don't get it. Well, nice little move up in here in the Aussie. We had a bias chart support, resistance is 71.66. That's continued to overall hold, but we actually got above it. There we go, right there, 71.66. So let's keep it in check. Because we're starting to get a bid and it's kind of doing its own thing, so to speak, and it's not basing on those silly U.S. China news. I don't even know what to even call it. It's just nuttiness, the way that keeps lingering on. We'll just move it just about here above this. You see right here that body close, 71.83. It's not a whole lot higher from where it was, but we'll just move the marker up just a little bit here to that daily close, 71.83. Not that we ventured that much beyond here, but give a little space because it's got some momentum. We'd have to see whether or not we do get to. And as I said, they were disappointed because they thought they might suggest an easy bias more sooner than later, and it appears to be it's more later than sooner, or they're saying we'll see how developments go. So as far as support, we'll stay with this 70.90. I want to just keep it there. I think that's that's not even that far away. So 70.90 is, we're going to go stay with that with the for the Aussie. Boy, I tell you what, Blake's got to be doing very well on that Aussie New Zealand dollar, because the Aussie's trying to keep this strength to move higher. And you're not getting a whole lot of play out of the New Zealand dollar. We did move just a hair. I don't see any reasons for any changes. 68 cents, I think we've had there on the buy chart, obviously in very, very quiet activity. And on the lower side, 66.95. It's all well and good here. So I don't see any reasons to go and change that here with the Kiwi. And here for the Kiwi versus the yen. This trend line's keeping us pretty much in check here. We had 74.40 on the downside here, and that's still keeping us in check. We're not moving a whole lot. We're not moving, well, then again, what can you say? We're not moving a whole lot to start with anyways. But we did have our resistance here, 75.36. You know what? I'm going to give it the opportunity to still stay there. Although right now, if you looked, you've got some nice volume coming in right there, 75.21. Right there. Actually moved in higher, but this is right there. Because you got this medium-legged doji here. It's not even medium-legged, but on a very, very short-term basis. So we'd have to close above that to give ourselves any meaningful resistance. And right there was our 36, or even a little bit higher there. But this would actually be where it would play into play. So it kind of seems silly, but we'll just go right there with those technicals. And actually, just above there be right there, 75.31. I think seems a little bit silly, but we'll move it. We'll move that resistance to 75.31. A big whopping 5 pips lower. With that, let's go and move into the dollar CAD. Well, we've once again made it up here to this key area here in the daily, the 33.54. We're trading a relatively tight range. We did get that dip below 133 we were looking for. I thought we'd push even lower. I thought we'd get into the 70s, maybe into the 60s, and we came back and we're jumping right back up. Look at this here. Nice run back up here to the 33.54, only to close right back down and then turn around and jump right back up. But we're seeing crude slide a little bit here. I know Stelius, I believe, is the one who mentioned about the crude area, as well as Grega. It's hung around here. I'm talking about the crude. It looks like now we're starting to ease back just a bit. That might give us that upside impetus. Just when I thought the CAD may want to slide, give up a little bit further. It's still holding up very, very well. Looking at key resistance. Well, on a daily close, it's all about this 33.54, but it certainly looks like it wants to come back up. Let's take a look here on the 2-hour. It's going to be right there at 33.81. I wonder why it's coming up that way. Odd. But anyway, 33.81. It has maintained its bullishness. On the downside, well, they're defending this very well. So on the downside, keeping it very, very tight is going to come in right here. Right there, 33.26. We're going to keep it very, very tight. And the reason is, I'll tell you what, I'm going to turn the tables on this thing. Hold on. It's going to be right there at 33.25. 33.20. They're defending it very well, and crude's already starting to slip a little bit. It's losing a little bit of momentum, so at least you know where your risk is. So 33.25. Moving on to the dollar peso. Unbelievable this way. You know, one of the things that we were covering in the news, I thought this might be key. The all-country stock index ticked lower, and its emerging market component broke a 10-day winning streak, its longest run of gains in more than a year. This might help quell this downside momentum. And also, crude's starting to slip. We might open the door here for a little pop here in the peso. We did have a little bit of extra support in here, but the market really tested that very well. I think we have the door here. We might have a little something here, folks, in the peso. Once again, the all-country stock index ticked lower, and its emerging market component broke a 10-day winning streak, as long as we're on gains in more than a year. I don't think we're going to rise like a phoenix from the ashes, but I think we could probably see a nice little bounce. Probably take us somewhere around 1895 for starters. So keep that in mind, along with the crude oil. You know, we might finally start to get a little bit of a pop here. So we'll keep our support, or not keep it. Our support's going to be 1882. I think the peso is probably going to provide the most opportunity today. That may have been close to like something like maybe beyond like an 88%. But anyway, resistance. I'm going to give it some room. For starters, 1893.6. I think this probably offers the best opportunity here, the peso, because you may finally have something like a little catalyst. We're oversold, but we were oversold here, we were oversold here, we were oversold here, we're oversold here, but we may have a little bit of a catalyst. And with crude starting to ease back a bit, maybe we can get this thing to get a little bit of an oversold bounce here. I think that may offer an opportunity there. Let's go to the dollar yen. Well, this came into that 10.95. I really don't have anything much to say about the dollar yen. I missed that opportunity. I was talking about it being a short at 11.44. The market came up a little bit short. Then on the rally back up, I was looking myself for 11.35. It came a little bit short. We've already come down. Really no interest in this thing unless it would make a move up to 11.44. That would take out the prior high. So really no interest at all whatsoever. Um, you know, yeah, just put it right there, 1135, right there. Equities is still, we already had this pullback here. So those people that got long, which I thought was wrong, up in here because we didn't take out the 1187. Well, that did slide back. It hasn't. I will say this: it hasn't. It's not like the wheels have fallen off the caboose, but not really interested in this thing until we come up here. Not till 11. We'll stay there. 1136. Support. Well, there was our support that hit this market pretty good. The low was 1184 and a half. We had 1181. I mean 1081. Support's not going to come in eventually if we break lower until right there, 1054. We're going to give it a wide range. Let's go in here to the cash dollar index. When we came into that 96.81 on the daily, we actually had our buy chart. I think we had it. I thought we had it 74. Might have even been. Yeah, we did. We actually for the extreme move we went to 62. Tough one here. Unless the dollar wants to make that move lower, I'm going to stay with what I thought in the beginning of the week, which was these equities on this. The boy that cried wolf business is getting old as Methuselah. The thing is that one thing equity traders love to do is the thing that until it's broke, they just keep going. Don't fix it. And as we get close towards the end of the week, they'll probably keep the bid on. But I don't know. I just feel like this market's still open to moving a little bit lower. Whether we see that on a Friday or not, I don't know. I'm not of the ilk that this dollar can break a whole lot lower. We'll go. I'll tell you what we will do. We'll keep this 62 here. Once again, just so you don't get caught with your pants down, but you know where the risk is. But I really don't see it breaking a whole lot lower, but we'll see. Excuse me. Let's take a look here on the upside. I think it's going to depend on the equities at this point. I think you have to keep your eyes affixed here with the S&Ps. We'll just quickly jump into there to give us some perspective. We're looking at it on a 2-hour chart, so you can see here, almost like a little gravestone dojo. We took a little bit of a dip, not any real follow through, but I am a bit surprised we were able to get back above this level. Now we goose some stops, and then we have a little bit, almost like a gravestone dojo. We paired back a little bit. This is going to be key. I have my alarm on this. Yeah, 2887, go with 2886. But I would keep an eye on these equities. Upside, well, for right now, it's just 97.08, keeping pretty tight. If we can get past 97.08, that really opened the door for them to move higher. You can even make the case right here at 97.13. Yeah, we'll give it with this 97.13 right here. Well, we had our resistance here at the 1309. We poked our heads above it a little bit. You can see that. Yeah, at the beginning of the week, we were looking for a move that we thought would run out of gas at 1308 when we had our Asian analysis. So we've come in here. I think that was a pretty good run up in here, and that we'll keep that 1309 in check. And if we do get the equity start to slide, the dollar comes up a little bit, we'll stay with this 1296. We're gonna stay there. No real changes there. Let's go and quickly move into the cross rates. Well, Euro pound's starting to gain a little bit, and that to be probably expected. I don't see this cable doing anything here. Although there's open for this market to move a little bit lower. I think the real resistance here, I think we could maybe move a little bit higher here. It's going to be right there at 86.60. We had 63, we'll keep that. And on the downside, I wouldn't expect a whole heck of a lot of downside here. Move it right there, 85.85. Right there, in check. Let's go and move into the euro yen. The euro yen was interesting in the sense that we made up to that 61%. That was our resistance, remember, early on Tuesday. And it held, and we dipped back, we challenged it again, and we had a pretty good slide back. I'm trying to work a little bit higher. Resistance is now going to come in right there at 25.48. We almost made it there, right there, just going with the levels. We had a little bit of extra room yesterday with the ECB, just in case. Support's back to this key, this critical 25. You know, I'm not expecting a whole lot out of this. Right here. 57.92. Actually, 57.93. Adjusting these lower after the ECB. Had to allow for those surprises. Support would come back down to test this area here and come in right there. If we dip back, if we start to slide back, that's where you're going to find, and they test that level, it's going to be right there at 57.30. This one hasn't broken out. A lot of folks looking for this one to really push higher. We haven't. On a very short-term basis, it's going to be right there. We're really going to tighten it up pretty good. 67.19. Thinking they may pare back a little bit. Right there, 66.40. We'll move just a hair bit lower. 66.41 to allow for this thing to work a little bit. 66.41. This market is getting a little bit long in the tooth here. We've had a pretty decent run here in the Aussie dollar, but equities might be getting a little bit tired here. This is an interesting one. We've hung around here. You almost have like a little triple top. Look here, 1, 2, and 3. If we do break, that will pretend to move down here to 78.40, so a good 100 pips. Resistance is going to be right there, 79.75. That's 74, that's fine. And support is not going to come until 78.82. If we do make that move, we'll break lower, and then I think we'll make it down to 78.40 before you see some real good buying. But and once again, this is all dependent on equities. You want to keep your eye on this boost. It's had a pretty good little run. Remember, I can't help, but it's not the same thing, but I can't help but thinking that maybe the market's got a little bit tired. We talked about that all country index after 10 straight sessions. Maybe these markets are a little bit ready to just ease back a bit. It doesn't mean the wheels are going to come off the caboose. It doesn't play into that, but I'm just saying is maybe we'll get this pair back across the board where they all just ease back a bit. So I think this one is a pretty good one also. from a risk reward. I don't think it's as good a risk reward. Look where we're starting to see the peso move higher now. Now we're at 18.85. Not a whole lot higher, but I think the peso is the best risk reward right now. This one's stuck in the mud. We had that 45.64. Did make it up there. We're just going to go with that level there, 45.64. Got a little bit higher than I would have thought. Here, hold on. And the support comes in right there at 44.93. So far, the two that look the most interesting is the peso. I really like the peso right here, and it's actually on its highs now. And I like the Aussie dollar for a risk reward. But we'll keep it on what equities do. Let's go on and move in now. I'm going to go right here with this, A231. There, oh, we kept it already. Okay. With the upside right there. 83.26. Holy smokes, this one's really stuck in the mud. Resistance comes in right there, 94.12. Boy, this thing is right there on the precipice of a pretty good little drop. If we do, for starters, would come in right there, 92.83. Well, there's the buys chart for today, and the one market I do like is the peso here. We talked about that. And I already went to you. I don't want to belabor a point, but this caught my eye. And I always like to, one of the reasons I like to go on news, because I think it gives you a, let me see, we're starting to move here. It gives you a theme. That's what I was going to say, a theme. And this is the thing that stuck in my head when I was reading that. The all country stock index ticked lower, and its emerging market component broke a 10-day winning streak. 10-day winning streak. Its longest run of gains in more than a year. Now look at this market. For the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Look at that. I like it here. That's what we have, though, for the European crossover. I'll get the buys chart posted. Thanks for joining us. Have a great trading session, although I know it is rather quiet.